Good afternoon, everyone. Well, it's been a very interesting day today. First of all, we had the announcement, which looked like it was coming for the past week, about MF Global's bankruptcy, and that's affected quite a lot of people, especially in prop trading business, as a lot of futures business was actually done through MF Global. So me included, actually clear through MF Global, so I can't actually even trade right now. Haven't been able to trade since the morning, and so the company's been working in terms of finding a new clearer. So, I think there's probably a lot of people that are trading futures in that sort of situation right now. And in terms of the market anyway, thought I'd do an update. And as you can see, we've had quite a big pullback in equities and a big rally in bunds. We're almost up 200 points for the day, and this has been largely due to the fact that Italian bonds are yielding over 6%, which is quite a worry for a lot of the people, despite the Eurozone ESFS bailout and the haircut for Greek debt. Also, I think slight fears of contagion through MF Global bankruptcy, and just general profit taking after quite a big run up that we've had lately is leading to the type of day we're having right now. Now, I'm just going to analyse Bund as usual, but this time I'm going to look at the S&P 500, since it's a bit more widely looked at than the FTSE. And this is a 60-minute chart, and if I just go back, right, and this is where you could see before when we were in that big range, and as you can see, we're bouncing off between 122, 1228 and 1187 for the best part of a couple of weeks. And I just want to go further back, and we can see. See the long term. If we look at this is a 120-minute chart, and as you can see, we're practically we actually came back to a low of 1068, and since then we have rallied the best part of 200, almost 200 ticks basically. And we traded as high as 1289, and right now we're at 1261, so we're 25 ticks off the actual high of the move. But it's a massive move we've had, pretty much in a straight line. We've gone up a good almost 20%, and that's been the rally. It's broken out of that big range that we were in before, and this is where we are right now. If we look on a 1-minute chart, you can see for the day we've been pretty stagnant right now. We've been bouncing off nicely of 1261.75, but we're on a bit of a downtrend right now on a 1-minute chart. If I draw in the trend line, we can see that just forming lower highs, and so it looks like we might break out on that. As you can see, we've been on a bit of a downtrend, lower highs and lower lows too, if you look at that. So we've been trading in this channel, and I think until it breaks out of one of these, I think this is where we're going to continue to trade. And looking at the 60-minute once again, as we can see, we've come off slightly off the highs, but we've got a long way to go really to test some of the levels that we've had before on the way up. If we look at I've just drawn in a Fibonacci retracement line from the move that we had from last week to now, and as you can see, from the point upwards at 1216 to 1289, we have a Fib 38.2 level at 1261, which we actually bounced off 3 times. So that level seems to be holding very well, and so this is going to be a key. It looks like it's a very key support level right here, and the trend is going down. But if we can break through this 38.2, the next level we've got is this 50 retracement level, which coincides with another previous resistance and now support at 12.54, and so that would be the next level that we're sort of looking at in that. And going all the way back, if we're going to get the full 100% retracement, we're going back down to 12.17, and then we have support at 12.15 too. So this is the sort of levels that I'll be looking at in the indices, and we've come up, like I said, 20% a long way, just as a sort of you would expect, as a lot of the fear was taken out of the market from the Eurozone bailout and such things. So but I think we can come back a little bit, especially with this Italian yield level the way it is, and it'll be very interesting to see what sort of contagion we might have on MF Global. Right now they're saying that their biggest unsecured creditors are JP Morgan with 1.2 billion worth of exposure, and Deutsche Bank through all of its subsidiaries, which is about 1.1 billion. So it's going to be very interesting to see what happens. I think now is a good level to have a bit more bias towards the short side, especially on the move we just had. But I mean, medium to long term, I still think the way we're looking is up, because a lot of hedge funds have been underperforming the S&P index, and so just to catch up on performance, the only way they can really do it is by buying and driving the stock market up. So I think despite all of this, we're still going to go up in the long term. So coming up to Christmas, I think we can probably break 1300, but again, I trade it day to day, so that's my long term view. But day to day, see how it goes, look at the support and resistance, and play around those levels. Now the Bund, again, has been in a very big range too. If I just bring up the chart of the Bund, as you can see, it's been very choppy, and this is a 300 tick range that we're actually looking at. This is on a 60-minute chart, and we've come off, we came off 600 ticks from the highs that we reached at near 139, and then we had that strong 135 resistance level, support level, which broke, and from there we actually pushed down another 200 ticks from there, and then we had a low of 132.94, and from there we sort of bounced, played around the 135.77, and then we came back, tested it again, and that was the low of the previous move. We went 6 ticks past. We actually went to 132.88, but if you had a wide enough stop, we've actually bounced really nicely since then, and we've pretty much gone up 250 points in a straight line, as you can see. Looking at it a bit closer, and going to a 1 minute chart right now, you can see, actually we'll go to a 5 minute chart, as we can see a bit better. You can see we bounced off this this trend line, this falling trend line that actually put in the 60-minute chart, and as you can see over here, that the lows were getting lower, whereas the highs were remaining the same. And as we broke that, we actually initially found resistance off that trend line, but then we gapped above it, traded to the trend line, and since then we've just been up the whole of today. And a lot of that is based on the Italian debt and Italian yields. So looking forward, what do we see? Well, 136.04 is where it's been pretty sticky, basically between 135.77 and 136.04. That pocket right there seems to be a good level to sell, with a stop just above, maybe 136.20. And in terms of support, we've still got this falling trend line, so anywhere along this trend line might be a good place to buy, or 133.63, and on the very low side 132.89, which is the low that we reached last week. So if we get anywhere near there, be looking to buy, but right now it's looking like it's very good sell territory coming up. So if it gets between 135.77 and 136.84, that's definitely the level which I think might be able to get a few pips short in it from there, looking at this level, but if we do break, as you can see, it's actually tested this level 3 times. So if we do get up there, that'll be a 4th time it's going to test this level. So if we break out, we might break out a bit hard, considering there's been a lot of sell side accumulation that's built up around here. So if we break through, might be a lot of stops that have been that might be triggered to the upside. That would be good for a few pips. So I'm just going to keep it to those 2 right now. Like the equities, I think the long-term position of the Bund probably is going to be downwards, because just generally, as the relationship is with the equities go up, Bund goes down. I think that's probably the way we're going to head. But what's going to be very interesting is this week's ECB press conference, the first one in 4 or 8 years, or however long it's been, without Jean-Claude Trichet, and now we have Mario Draghi. So the way he's going to word things and everything's going to be totally different, and we'll see how the market actually digests all the information he'll be given. So one of the things that we're going to be looking for is whether they're going to continue to buy bonds, which I think they probably will, and that's going to be a big thing in that aspect. Anyway, I'll just do a summary of the levels, and until next time, good luck trading, and those on MF, hope you can get up soon and get back to your trading.